Okay, and good day to everyone. In today's episode of Growing Your Tree of Prosperity, we're going to go into a shallow dive into one of my favorite companies that I have in my personal portfolio called UMS. All right, UMS is now called UMS Integration Limited. Okay, it is an investment holding company. It designs, manufactures, and integrates high precision front end semiconductor components and subsystems. This is a very technical business. All right, that's very difficult to understand, right? Even for an electrical engineer like me, uh, my specialization is in computing, so I would not be very familiar with the kind of semiconductor components and subsystems that the UMS group is doing. But I'm going to try my best to simplify it for the people listening to my video today, so that even though you don't understand the business very well, you're still able to make good investment decisions regarding the company, right? But it also is a little bit diversified into aerospace materials distribution and electromechanical assembly needs. Okay, all right. So primarily, 84% of its revenue comes from semiconductors, right? Integrated systems and component sales. There is an aerospace division, right, that started when UMS started to gobble into a company called JEP. Okay, and that contributes 11% to the revenue. And then there is the other segment that probably isn't very consequential. Okay, market cap is huge, right? $1.08 billion. Net profit margin 16.5%. Very good, all right? Very good for a manufacturing company. Forward PE 22.51. Clearly not a U company, all right? Clearly, this is about growth. And the price to book ratio is way above 1. So, this is the kind of company that should animate the spirits of the technology-loving kind of growth investor that's actually quite rare in Singapore. All right, and I've owned this counter I think for over a decade. Okay, and it's brought me a decent amount of money over many years through its dividends and its stock splits. Okay, all right, so let's look a little bit at the dividends and the free cash flow. If you look at the rightmost column, which is 2024, right? UMS has always been very generous with the dividends, paying in the months of May, July, October, and December. Okay, for the last 12 months. In fact, dividend payouts have been occurring for the past 5 years, right? The forward dividend yield is not particularly sexy because of the high valuation of the company. So it's about 3.3% at the current rate. All right. Now, more interestingly, in 2024, the free cash flow cannot sustain the dividend payouts. All right. But I have a good reason to explain to you why that is not the case, right? Okay. And this is no longer a dividend yield play. This is a growth play on various semiconductor teams like artificial intelligence. And you're almost like buying the Magnificent Seven here, all right? So it's the equivalent of buying the Magnificent Seven in the Singapore stock markets. Okay, and you can witness the fantastic returns of 22.326%, inclusive of dividends for the past decade. Wonderful Sharpe ratio, 0.6. Of course, being a growth stock, your maximum drawdown is high. The maximum drawdown on most blue chips is about 30 to 35%. We're talking about, with bad market timing, you could be losing 46% of your capital when you buy this company. All right, fairly low correlation against the Straits Times Index because it is not the usual kind of dividends value play bank or REITs kind of company that you can own in your portfolio. All right. Okay, how do we think about UMS? Okay, right now analysts view UMS positively. The target price is about 159 to 162, so there is some upside to go, but not a lot of upside. Okay, the base compound annual growth rate for the business is 9 to 11%, which is actually quite high. All right. So with the SWOT analysis, it's got a close relationship with applied materials. Okay. And very importantly, UMS has a presence in the US, which makes it sort of immune to the Trump tariffs. Okay. So that's the thing you want to take note of. If you own a company, the company has a presence in the United States, very much safer from the Trump tariffs. All right. Okay. Strong profitability. It's been recently expanding into Penang. Okay, and with one customer, Applied Materials, UMS's weakness has always been about something like a one-trick pony. but the CEO is very aware of that, and so they've been trying to get more clients, and it's been relatively successful so far. All right, so it's slowly dealing with its primary weakness. Okay, so the weakness is 90% dependent on applied materials. Okay, and the second weakness, which I want to talk about that explains the high capex, is that cyclical earnings. Right, when you invest in wafer fab equipment companies like UMS, you are buying a cyclical stock that is tied to the spending cycles, right? So some of the companies would buy the equipment from UMS, and then after that they'll be using the equipment. They wouldn't be needing to buy more equipment in the immediate future. So the profits of UMS and the cash flow from operations comes in the form of a cycle, all right? And because of the opportunities from the AI boom, new customer ramp ups, right? UMS is obviously going through a process of capital expenditure, right? If I foresee that in the future there is market anticipation and they want a particular equipment in the future, right? Then I will need in the present day to spend a little bit more money to ensure that my company has the ability to ramp up production when the demand goes up again, right? Which explains why 2024, the capex is so high, the free cash flow cannot sustain the dividends for that year, but it can sustain the dividends for the previous 2 years. Okay, so when you buy UMS, you are the one that is taking the short-term risk. Okay, you are in the process of sowing now. You sow today, you reap later. 2026, 2027, you can reap the benefits later on. All right, so this is how you need to think about UMS. Okay, now the beauty of UMS at the moment is that there is a dual listing in Malaysia, and if you take the price in ringgit, right, UMS integration, and you divide by about 3.3 to convert to Singapore dollars, it's actually worth more in the Malaysian markets. It's worth about 160 in the Malaysian markets, whereas in Singapore, I think it's currently about 149, right? So Malaysians obviously value UMS more than Singaporeans, and I would consider it some sort of an arbitrage if you buy the stock in Singapore, all right? Obviously, when you're dealing with semiconductors and tech, there are rapid technology shifts and economic downturns. So for example, if AI doesn't play out, and all the investment into AI doesn't result in any productivity improvements, right, then UMS and all the technology firms will struggle quite a bit. All right, so that's something that you always want to keep in mind when you own a company like UMS. Okay, so what do you need to do before you make a decision on UMS? Obviously, how do you do your due diligence? Okay, first, you need to have a deeper understanding of the wafer fabrication equipment cycle. All right, I'm not an expert in it. I've gotten ChatGPT 5 to educate me on this. It's done a fairly good job. All right, so I know that we are not at the peak because there's still a lot of need for data centers arising from artificial intelligence. So this ramp up of expenditure in UMS is actually a very wise thing that the company is doing. Okay, all right, so this is a rising cycle, right? The dividends are temporarily unsustainable, so don't expect a very high dividend next May 2026. You probably get 1 cent, every 3 months. So your dividend yield is going to remain 3.3%, all right, moving forward. Okay, the CEO is known to be a visionary who can anticipate future demand by making investments in the present. So if you Google Andy Long, Andy Luong, right, and you go through his interviews, he will also talk a little bit about why he wants to position the company to be able to immediately ramp up for all these AI needs in the future. Okay. Now, at the moment, UMS is still a one client kind of company. So if you want to determine how UMS is doing, you must look at applied materials as well. You must look at the stock price, what is the latest analyst report, and how well they are doing before you can make a decision as to determine whether UMS would do well. All right, so that's the sad part about UMS, and because it's a one client kind of company for many years, the dividends have been very high because a lot of investors are kind of afraid to actually dip their fingers in it. All right. So it's very rewarding for people like me who has been holding on to the company for many years. All right. Now, do note that at its current incarnation, UMS is no longer a dividend or value play. All right. You are clearly betting on the growth of artificial intelligence and data centers. Okay. And finally, this is something I realized about UMS is that I find it very hard to imagine UMS without Andy Long. Right. Andy Long is visionary. I think I read somewhere that he came to Singapore as a Vietnamese refugee. So it's really one of those genuine rags to riches kind of story, and I hope that it will convince Singapore to be more accepting of talent coming from the rest of Southeast Asia to help us build our economy. And look how much money, right? This person has given to shareholders today. All right. So these are the considerations. I hope that you will dig in a little bit more about UMS, and feel free to put your comments on the video if you have any findings which has not been shared. Okay, and I thought it'd be interesting to put up a company that is objectively not a dividend yielding company anymore. It is clearly a growth stock. Okay, and if you like my content, you can subscribe to this channel here. If you want to listen to my life story, Google ERM intro, take the first link, come for my talk, right, on the early retirement masterclass, and I will see you soon. Thank you very much.